What is up, guys? Pete DiCarlo here, and today we are going to go over my extremely bullish thesis for Uber and why I think that by 2025, 2026, we could see Uber trading at $350 to $500 a share. I'm going to go over that in this video. I'm going to go over exactly how I see that happening. Sit back, relax, grab a coffee, and let's get into it. Now, before we get started, if you haven't already, hit the subscribe button down below. We are so close to 1,000 subscribers, guys. Thank you so much. As well, if you want to be part of our private mentorship program, it is 100% free for your first month. All you have to do is click the link down below, use the code FREEACADEMY, one word, all lowercase, get your first month 100% for free. So now let's get started. Why do I see Uber being $350 to $500 a share within the next 5 years? There are 5 main things, and I'm going to talk about them now. The first is going to be the dominance that Uber has right now. Now, for those of you who do not know, there are really, across the world, 2 main rideshare companies. They are Uber and they are Lyft. Those are kind of, the Pepsi and the Coca-Cola of the rideshare industry. As far as the food and delivery, there is more, such as Grubhub, Instacart, DoorDash, and all of these other ones. But Uber has become such a reputable brand over the past 10 years that everybody knows about them, and their dominance in this market is something that will obviously propel them into the future. When I'm thinking about getting food delivered to my house, personally, for me, it's either Uber Eats or it's going to be DoorDash. It might be different in your area and what city you're in, but I have a lot of friends who drive for Uber Eats, and I have even driven for Uber Eats, and I know that they are expanding as far as restaurants substantially. And in some areas, they are even doing this Uber Eats card where if the business is actually not a part of Uber Eats and has all the equipment that they normally would have, they actually give the drivers a debit card. And what would happen is, say I want to order from Taco Bell, but Uber Eats and Taco Bell are not affiliated. The driver would get my order, he would go in, order the food like a normal customer, pay with the Uber driver card, and I would still get it delivered to me just like it was a normal Uber Eats order. Now, how effective will this be? I'm not really sure, and I don't think that Uber is going to use this as a long-term gig. I think it's going to be more of a way for them to present to these companies that are not affiliated with them, like, hey, listen, there's obviously a demand. We have had X amount of numbers of orders without you guys knowing it, and there's obviously a demand for your restaurant to be on our platform. So now the next thing, and this is going to be the biggest one that a lot of people are going to disagree with me on, is profitability. And I know that a lot of people will not invest in Uber because of the profitability issues and how they have not been profitable yet as a company, not to mention all of the cash that they are currently burning. Now, one thing that I do have to say is that the numbers are getting better. Are they getting better as fast as everybody wants them to? No, but I do see their path to profitability being pretty clear. And in the last earnings call, Dara actually said that they would probably be profitable by the end of this year on an EBITDA basis. Now, is that going to stay this way now with, the whole ride sharing aspect taking a hit because of COVID-19? We're going to have to see. But for all the naysayers who say that Uber is not profitable and they're never going to be profitable, if you look at the numbers, the ride sharing aspect of Uber is profitable. What's really bringing down the financials is Uber Eats and Uber Freight. Now, with Uber Eats, they are losing a ton of money, same with Freight, but they are working, in my opinion, being on both sides, knowing the platform on both sides. They really are doing a good job at expanding their range, and I do think, whether it's ethical or not, that they will monopolize the delivery aspect of Uber. Eventually, they're probably going to take most of the customers away from these other companies, and then they will probably end up raising the prices in hopes to make that sector of the company more profitable. Now, the third thing that I really like about Uber and how I see them hitting that price target is that they are a disruptor company. And we all know that it's the type of companies that disrupt the market, such as a Tesla, that bring those huge potential returns as far as an investment. And now, while normal Uber was a huge disruptor to taxis and the rideshare business, and Uber Eats is trying to do that with the delivery services, I think that Uber Freight and the future of Uber Freight are really going to be a disruptor to how we ship things across the United States. And that is going to bring me to my fourth and really the main reason that I see Uber hitting this bullish price target, and that is going to be with their AI technology. Now, for those of you who do not know, Uber actually does a lot with AI technology, and in the future, self-driving cars. Now, you see people like Elon Musk and Tesla talking about this AI taxi network. Well, I think that Uber will also be in the forefront when it comes to this, because here's the thing, guys. We're going to have self-driving cars. Whether you believe it or not, whether you think it's going to happen within the next year or next 10 years, this will be a thing. We will have self-driving taxis, we will have self-driving cars, and we will have self-driving trucks, because even from a shipping standpoint, such as Uber Freight, it's not like an AI vehicle has to sleep like a truck driver would have to. The human error is going to be a lot lower. While it is sad that it's going to put a lot of American workers, out of a job, from an investor standpoint, it does look very lucrative and something that will push the price of this stock and the company up within the next 5 years. And so as far as AI driving taxi networks and shipping, I see Uber and Tesla being at the forefront of that. And now my fifth and final reason is because Uber not only is a ride sharing delivery, technology company, they are also a data company. And there are two things in this world that have the highest price tags. That is data and time. Those are the two things that have the highest worth in this world right now. Uber tracks everything on their platform. If you're somebody who uses Uber regularly, they probably know where you live. They probably know where you like to eat. Uber probably knows that on Tuesdays you like to order pizza, on Saturdays it's Chinese food night for you and your family, and on Sundays you guys like to get ice cream. They know what bars you go to on Friday nights. They know that if you're with multiple people at a time. This company does a great job of collecting data, and this data can be either used to further their technology or to be sold, because companies will pay the highest ticket price for data on their potential customers. All of these things lead to obviously the company making more money and the price of the stock to go up. Now, some of you might be like, well, listen, Pete, all right, I agree with you on some of those, but $350 to $500, Uber was $17 a share last week. And yes, this is true, but you have to look at Uber leading up to their IPO last year. The market cap and the original IPO share price had been slashed multiple times before they had even actually gone public. Now, I don't know if you guys know what a lockout period is, but that happened back in November. Now, when you're a company and you're first raising capital, you usually go to a bank or investors. These investors are usually called angel investors or VCs, which are venture capitalists. For instance, if you look at the show Shark Tank, you'll see that all of the people on there who are the investors, like Mark Cuban, Barbara, Robert Herjavec, all of them, they are venture capitalists. And what happens is you can invest in companies while they are still private. And that's what Uber was doing for a very long time. Some of their biggest investors were people like Gary Vaynerchuk. And when a company goes public, usually you would make a ton of money because the share price will go up. Well, what is in place is called a lockout period, which means that all of these original investors cannot just dump their shares the first day that it goes public, because that could crash the stock prices entirely. So they have what is called a lockout period, which means that you are not allowed to sell your shares until a specific date. And this was back in November of last year, and this is when we saw the price of Uber go from like $40 a share all the way down to $26. Now, we did recover, and I think that we had some pretty good earnings last quarter, but now, obviously with this market crashing, the price of Uber stock has been dropping drastically, and we seem to have hit a bottom. Now, obviously, I'm a long-term investor in Uber, and for these 5 reasons, I really see Uber being speculative, of course, but a tremendous investment if you can buy shares at this price. So let me know, guys, do you think that I'm crazy? Do you think that Uber will never hit $350 a share? Do you think that Uber will go bankrupt? Let me know if you agree with me, and let me know if you think I'm a complete moron. Thank you guys for watching. Stay safe. Make sure you hit the link down below to join our private stock market mentorship group, and have a good weekend.